So I've had a lot of people inquiring about mortgages. The number one question I'm getting these days about mortgages is, Andrew, with interest rates having gone down, why are mortgage rates not going down? Here we are, we've just seen in the month of March, we're early April right now, we've seen the month of March, the Bank of Canada cut interest rates 3 times, 150 basis points is what we say in our world, or 1.5%, yet mortgage rates have started going up. So why is that? So I called to talk to some of my friends in the mortgage space. Mark, thanks for your help on this one. And found out that right now, in the mortgage and lending space, we are actually seeing uninsured mortgages basically being canceled. So if you would go out to your mortgage broker or to your bank and get a secured rate, a secure rate, those are being canceled now. And in fact, about half the lenders out there in the marketplace today aren't even offering uninsured mortgages right now. For those of you who are going to be able to get an uninsured mortgage with one of the remaining lenders who are still lending in this space, the current rate is about 3.2%. The insured mortgages, fortunately for those of you who qualify, are still attractive. In fact, they're probably more attractive today than they've ever been for these banks. And I'm going to give you a little bit of insight as to why in a moment. But first of all, just to be clear, an insured mortgage, 5-year fixed term rate, which is the 5-year fixed term mortgage, tends to be the most commonly used rate or mortgage in the borrowing and lending space, is currently charging about 2.5%. So you can see 2.5 versus 3.2 is a big difference between insured and uninsured mortgages. So why is that? Well, see, what happens is the banks can take the mortgages that they lend out on insured mortgages through CMHC, and they can package them up into bonds and sell them into the market. And in fact, as part of the stimulus recovery response package because of COVID-19, the federal government has recently announced that they're going to go out and buy $150 billion of these themselves. So now the banks are really incentivized to issue insured mortgages because A, they're insured by CMHC, and B, there's a buyer for these in the aftermarket when they finally package them up into what are called mortgage-backed securities. So if you haven't seen the movie Big Short, you can watch that and it'll give you a little bit of insight into how this program works. So to summarize, uninsured mortgages are basically unavailable, especially on refinancing. Insured mortgages are available, but here's the catch with the insured mortgages. And this doesn't really help any of my friends or clients or family members in Vancouver or Toronto. In order to get an insured mortgage, A, you can't borrow less than 80% of the borrowing cost of your property. So you have to put a down payment of a minimum 5%, but you can't borrow more than, you can't put down more than 20%. You have to borrow at least 80% of the value of your property. So if your property is, say, worth $1 million for simple math, you can't put down more than $200,000. You have to borrow at least $800,000. But that leads into the second catch, and this is the one that's difficult for borrowers, property purchasers, and refinancers in Vancouver and Toronto, is that if the property value exceeds $1 million, you automatically don't qualify. So good luck. I mean, in this market, even where prices are probably going to soften right now, it's very difficult to buy a home for less than $1 million. It also has to be a principal residence. So if you are going to get a CMHC insured mortgage at this lower rate of 2.5%, you have to live in it. It can't be a rental property. And then finally, with the dropping interest rates, the other thing that changed, of course, is the stress test. And so the stress test used to be a flat, I think it was around 5% is what you had to qualify for. Now it's whatever rate your borrower is going to be able to lend to you at, plus 2%. So from an affordability perspective or a stress test perspective, you have to have enough cash flow to be able to borrow at a rate equal to 2% above whatever rate you're getting quoted from your bank. Now, something else that I think is important to understand about why this is happening right now. Why are interest rates going down, deposit rates are going down, but mortgage rates, which are the mainstay, it's the bread and butter of the banking industry, why are those going up? Is it because the banks are being greedy? Well, partially, yes, that's what banks do. That's why it's always good to have some banks in your investment portfolio. But there's something else that's going on behind the scenes that a lot of Canadians don't know about. Right now, the banks are seeing their deposit base being drawn down. And we've gone into a very high-risk environment, and banks don't like taking on risk. With so many Canadians becoming unemployed right now, It's a very risky business, lending. Banks don't want to lend, not in an environment like this. So in order to detract from borrowers, they basically just raise interest rates. They make the cost of borrowing higher to offset the risk that you might not be very good on your loan if they lend to you. The other reason is because with the banks seeing these deposits being drawn down, as they've seen institutional money going out the door, they've seen tons of retail depositors drawing down on their deposits. And why are retail depositors drawing down their deposits? Because they don't have any income. So if they don't have any income, they've got to draw down on their savings, at least until these government programs come into place, which haven't happened just yet. So as the deposit base comes down, the banks have less money to lend out. And that's why you're seeing this happening. I get asked a lot of times, is now the time to refinance? Is now the time to go and lock in at a lower rate? Should I go variable? Should I go fixed term? Here's a note on the variable rates. Here's something else that's very interesting. The banks used to offer variable rate mortgages at prime minus something, prime minus a quarter, prime minus 0.3, maybe even prime minus half. That's off the table now. The best rate you can get in the prime space right now, if you want to go with a variable rate mortgage, a mortgage rate that moves with the overnight rate of the Bank of Canada, the prime rate, the best rate right now is prime plus 0.3, 0.3 and a half, 3.5, so you're looking at about 2.8% borrowing cost. So to summarize, you've got three different rates. You've got the 5-year fixed term insured mortgage rate is the lowest you can get right now at about 2.5. The next best after that is going to be a variable rate mortgage, prime plus 0.35, let's call it 2.8%. And then finally you've got up in the top end, you've got prime, is a fixed rate mortgage for a 5-year term, uninsured, and that one's charging about 3.2, but keep in mind, that 3.2, that's if you can get someone to lend you in the first place. We're seeing bank deposits being drawn down, so banks have less money to lend, and we're seeing the risk profile of many Canadians going up. So banks don't like taking on risk, so they want to be careful about who they're lending out to. One of the ways they manage that risk is just offsetting the risk by charging borrowers higher interest rates. I think right now is probably not the best time to be refinancing your mortgage. Rates are not going up anytime soon. I think when people start getting back to work and the risk profile of the lending space for the banks starts to decline and the market starts becoming competitive again, you'll start to see, I think, mortgage rates come down. And at that point, I think it would be a good time to look at refinancing, but probably not today. Of course, I don't know for sure, so for full disclosure, I cannot predict the future, but that's my take on it. Hope you find this helpful. My team's available if you need some assistance on debt consolidation. If you need to talk about your investment portfolio, love to chat with you. Thanks for listening in. We'll be back with you soon.